Welcome back to AI Assets, your daily source for the sharpest AI investment intelligence. This is not just a tech story. It is one of the most important competitive repositioning events in Silicon Valley in a decade, and the stock market is not fully pricing what it means for Apple, Google, Anthropic, or OpenAI. Let's break it down right now. At WWDC 2026 this week, Apple unveiled Siri AI, the most radical overhaul of its voice assistant since it launched in 2011. The new Siri is conversational, context-aware, capable of acting across apps, searching through your emails and messages, summarizing documents, and browsing the web in real time. On paper, it sounds like everything Apple should have built itself. But here is the detail that changes everything. Siri AI is not built on Apple technology. It is built on Google Gemini. Earlier this year, Apple and Google announced a multi-year partnership under which every future Apple Foundation model, the AI core that powers Siri and Apple Intelligence, will be based on Google's Gemini models and Google's cloud infrastructure. Apple is reportedly paying Google approximately $1 billion per year for access to this technology. And it goes further. At WWDC, Apple also announced iOS 27 extensions, a new framework that lets users replace Siri entirely with Claude from Anthropic, ChatGPT from OpenAI, or Google Gemini, set as the default AI assistant across the entire Apple ecosystem. Think about what that means. Over 1 billion Apple devices suddenly open to Claude, ChatGPT and Gemini as fully integrated default AI assistants. This is not a feature update. This is Apple turning its hardware empire into a distribution platform for every major AI company on Earth. Now let's get into the investor context, because this is where it gets extremely interesting. For Apple shareholders, the immediate reaction at WWDC was lukewarm. The stock barely moved. But that is exactly the wrong read of this situation. Apple currently trades at $301, with a market cap of roughly $4.5 trillion. It has grown 50% over the past year and 137% over 5 years. The market is valuing Apple like a hardware company. But what Apple just became is something fundamentally different. By opening its platform to Google, Anthropic, and OpenAI, Apple becomes the toll road for every AI assistant reaching 1 billion users. Under the iOS 27 extensions framework, Apple takes a cut of every AI subscription sold through its App Store marketplace, exactly the same model it uses for Netflix, Spotify, and every other app. If Claude, ChatGPT, and Gemini each capture even 5% of Apple's 1 billion active users as paying AI subscribers at $20 per month, that is $1 billion in monthly App Store revenue flowing to Apple from AI alone. On top of the $1 billion it already earns annually from its Google search deal, which just expanded to include AI infrastructure. The direct beneficiary for investors today is Alphabet. Google's Gemini is now the backbone of the world's most valuable consumer hardware platform. Every iPhone user running Siri AI is running Gemini under the hood. Every Apple Intelligence feature launched this fall generates compute revenue for Google Cloud. Alphabet's market value crossed Apple's for the first time since 2019, the day this deal was announced. Anthropic is the second direct winner. iOS 27 extensions gives Claude distribution to the most valuable consumer base in tech, with no marketing spend, no user acquisition cost, and Apple's trust and privacy brand as the delivery mechanism. Now here is what the market is completely missing about this story. The media is framing this as Apple losing. Apple couldn't build its own AI. Apple is dependent on Google. That narrative is being written by people who don't understand platform economics. Apple did not lose. Apple made a strategic choice that mirrors exactly what it did with music, maps, search, and payments. Integrate the best third-party technology, own the distribution layer, and capture the margin without the R&D. De-risk. The R&D cost of building a frontier AI model that competes with Gemini Ultra is somewhere between $5 and $15 billion per year, and climbing. Apple looked at that number, looked at what Google, OpenAI, and Anthropic had already built, and decided to buy access for $1 billion instead of spending $10 billion to compete. That is not a failure. That is one of the most capital-efficient decisions Apple has ever made. But here is the risk nobody is discussing. The iOS 27 extensions framework, which allows Claude, ChatGPT, and Gemini to replace Siri entirely, creates a direct threat to Apple's long-term moat. If users habitually interact with Google or Anthropic AI instead of Siri, the relationship between the user and Apple weakens. The stickiness of Apple's ecosystem has always been about the user trusting Apple. If that trust transfers to an AI model built by someone else, Apple becomes the hardware, not the experience. That is a slow-moving risk, but it is real, and it should be on every long-term Apple investor's radar. There is also a massive regulatory angle. The EU has already blocked Siri AI at launch due to regulatory concerns. Apple has explicitly stated the feature will not be available in the European Union in iOS 27 or iPadOS 27 at launch. With the EU representing roughly 25% of Apple's installed base, a prolonged regulatory block on its flagship AI feature could meaningfully delay the monetization timeline investors are pricing in right now. So what happens next? And how do you position yourself? 3 dates and events to watch closely. First, iOS 27 public beta, expected in July. The first real-world user reactions to Siri AI will set the narrative for the fall iPhone 17 launch. Watch for retention data and social sentiment. That will tell you whether the Gemini-powered Siri actually closes the gap with ChatGPT in daily use. Second, Apple's Q3 earnings in late July. Tim Cook will be on his final earnings call before stepping down as CEO in September. He is virtually certain to be asked about the Siri AI rollout, the Google partnership economics, and the EU regulatory block. His answers will directly move the stock. Third, September. John Ternus takes over as Apple CEO. A new CEO inheriting the largest AI platform transition in company history is a catalyst event that markets consistently misprice in the short term. Ternus has been the architect of Apple Silicon, the M-series chips that will run AI on device. His strategic vision for AI could be significantly more aggressive than Tim Cook's. The smart positioning strategy right now, Alphabet is the most undervalued direct beneficiary of this story. Google is being paid by Apple, paid by SpaceX, paid by Anthropic, and building the AI infrastructure backbone for 3 of the biggest companies in tech simultaneously. If you believe AI infrastructure wins long-term, Alphabet at current valuations is one of the clearest opportunities in public markets. For Apple itself, hold, but watch the EU situation closely. A prolonged block on Siri AI in Europe is a meaningful downside scenario that is not yet priced into a stock trading at 36 times earnings. Apple just turned 1 billion devices into an open AI marketplace. The winner is not the company you think. If today's analysis gave you a new angle on Apple, Google, and the AI platform wars, subscribe to AI Assets right now. We do this every single day. The news, the full investor context, and the angle the market is missing.